Exercise 318 picks up where exercise 316 left off. 316 had us doing statement of owner's equity and a balance sheet from the adjusted trial balance. Now we're going to do the closing entries and prepare a post-closing trial balance. First things first, let's do the necessary closing entries. Well, remember, the closing entries involve all revenue accounts and all expense accounts. They're the temporary accounts. Those are the income statement accounts. They're the temporary accounts or income statement accounts, and they're the ones that need to be closed. So let's take a look, and we see that our revenue, our service revenue, is $54,000. It's got a credit balance. To close it, we need a $54,000 debit to revenue, because here's what we're doing. We have in our revenue account $54,000. We want that to go to zero. We want to close the accounts. So we'll close that to retained earnings with a $54,000 credit to retained earnings, $54,000 debit to service revenue. At this point, the balance in the revenue account is zero. It has been moved over to retained earnings. We need to do the same thing with all of our expenses. So let's take a look at our expenses. We have salaries expense, which has a $20,000 debit balance. So we need to credit salaries expense, $20,000. We have $13,000 debit balance in advertising expense. So we need to credit it $13,000. That takes it to zero. Our rent expense has a $10,000 debit balance. We need to credit that $10,000 to make that go to zero. And our utilities expense has an $8,000 debit balance. We need to credit that to make it go to zero. When we do that, we have to now debit retained earnings for all of these credits. So that's 20, 33, 43, 51,000 debit to retained earnings. The last thing we need to do is we need to close the dividends. And we're told that we have some dividends here of $4,000. Dividends carries a debit balance, so we need to credit those for $4,000 and debit retained earnings for $4,000. What we did is we just took all of our revenue and all of our expenses, reduced those accounts to zero, and pushed the balances to retained earnings.